Welcome back to Krown's Kennel Cave, and today it's a very special day as we're going to be going over some very long-term analysis for Bitcoin specifically. It is a nice lazy Sunday, a steak Sunday of course as well, and some doggies are getting involved in this one too. So I want to start off this whole video by saying what we're going to talk about today is a bit of hopium, and I'm actually going to not just present what I believe to be the strongest case for the bulls, I'm also going to present, well, what I believe is the strongest case for the bears. Right now, I am somewhat leaning towards one, although I'll leave my opinion out of it until the end. And of course, with any one of these analysis, not like for, people to just grab onto whatever the fuck I'm thinking. It's so that you can come up with your own views as well, and perhaps well rounded out with whatever the fuck I'm looking at. Maybe take some things that you like, take some things that you don't like, and perhaps take nothing at all. So with that said, let's get down into it now in the Krown Sheet application, and I will start off with the bull case first. So what do we see over here on the top end dashboard? By the way, you can get all this data for free in the link description below. We do see a few somewhat interesting things right here. Fear and greed index is actually at a 31 right now. This is the lowest that we have seen it, of course, in the last about month to month and a half. The last time we really saw it back around here was when Bitcoin was hanging in the low $30,000 territory. And if you are going off it from that narrative, we are within the somewhat fearful zone now. Not necessarily extreme fear, but definitely a bit fearful. So that would be a little bit more on the Bullish side, if you will. Bitcoin dominance at 41.5%, not much new right there. But you see some altcoins going absolutely berserk in the last 24 hours yet again as well. Anyways, on top of that, if we go into the market data tab over here, we have a couple very interesting things going on right now. Global funding rate is more or less at parity. It is actually technically below there right now. More importantly, we actually saw this hit negative levels a couple days ago on, I believe, the 7th or 8th of September, meaning that when Bitcoin did have that massive down day, which should actually recover quite a fair bit on closure on that day, it should be known that we actually did see negative rates on this, meaning that you are paying too hot of your short position. And the weekly trend, technically speaking, is still to the upside. Well, actually, no, that is that is very much variable right now. So actually, that is unfulfilled, and we'll play into the analysis a little bit later. More importantly, though, we do see that the global leverage ratio did hit critical levels, the same levels that we did see on April 15th, and of course before that on late November, actually, before Bitcoin played out about a 30% correction, going from about 20,000 to I think it was 16,500 bucks. Anyways, with that said, I will be putting a lot of focus on this in the future. I actually highlighted this the day of that dumbola as a bit of a cautionary tale right there. Although I didn't necessarily think that it would play out in that exact fashion, to be quite honest with you. But now onwards and going forwards, I will definitely be keeping a keen eye on it. Now, another thing that's also certainly in the Bullish court as well is the Bitcoin exchange's reserves, which is not just in a downtrend. It is actually having a continuation of this downtrend. So what does that essentially imply? It essentially implies that, well, more hodling going on is essentially the assumption right here. And why is this relevant? Well, basically the history of it is anytime that we have seen a downtrend on this has been essentially Bitcoin's macro bull markets. You can see going all the way back since we started harvesting this data about a year ago in September, and of course that led us all the way through to the highs in middle of April when Bitcoin was about 65,000 bucks. Again, I should denote that this took it from a price point of about, I think it was about 10,000 or 11,000 bucks or so, which was rather interesting. Anyways, we did see a bit of an uptrend as Bitcoin did put in the major highs all the way into this area over here in late July. And then, of course, we did see it continue on with the overall downtrend going into our current territory right here after that about $24,000 to $25,000 rally off the current lows. Also, exchange's net flows is negative as well. A little bit of people taking their Bitcoins off exchange for the last 24 hours here. And then on top of that, we do see that the hash rate has completely recovered here for the most part. If you were to kind of take an average of this, it'd be right smack dab in the middle. And we also do see that the whale ratio is suggesting that we do maintain the downtrend over there as well, which does suggest that there is less selling pressure on price action here too. So those would be two interesting fundamental reasons, kind of supporting the Bullish case as well. So now we're going to go into the price action charts right now, and I am going to hold off on any short-term analysis for the time being. We'll actually flip back around to maybe at the end of the video, or should we do that right now? We'll do that right now. We'll get that right out of the way. This is not going to play into any of the long-term analysis. So we'll start it off right and over here. Bitcoin still chugging along the daily 55 exponential average right here, which is essentially your Bullish hoping for right now in the short-term time frames. More or less looking for a bit of a bear trap coming off this current level. Now, if you go down into the short-term time frames right here, we got the same territories that we were looking at essentially from yesterday, right around, whoops, I guess I'm on the wrong chart. Let me go over to this one. Here we go. There it is. Get another few tests down into that blue box territory, of which we did say was rather likely, and a few bounces as well, of which, well, we got that too. Anyways, what's most likely to happen right here in the very short-term timeframes? Are we going to come back down and make another attempt at the 44 to 45,000, or sorry, 44 to 500 level? Perhaps yes, but ultimately I would be looking for yet again another bounce right around there. Keep in mind, short-term timeframe short-term timeframes are in a downturn right here, except we do have an ever so slightly higher low right here, so that is of somewhat significance. Maybe better seen on a bi-hourly. No, in fact, actually no, that one did make a lower low, so fair enough. Anyways, 4 hour. Same thing here too, and momentum also just what are they essentially suggesting? We did actually print some hidden bearish evidence on the last 4 hour high. Could you argue that that's already played out? I believe that you could. 46,000 bucks all the way down to 44.5 or so, and we do see that this is coming on declining volatility. So I don't necessarily look at this as completely playable right now. And more importantly, of course, over the weekend, you know, it's more or less, at least in my opinion, waiting for CMEs to open for the real trading week, which happens a little bit later today. I believe at 5 p.m. Central Standard Time. So with that in mind, we got the same sort of ranges again going on right here. Wouldn't necessarily be looking for a breakdown if it is going to happen today, if it is going to happen, I don't believe that it happens today. And the only way that I'd really be even on that same sort of tip is if Bitcoin does start to close 4 hour dollars below about 44,000 bucks, the bottom end of this nice liquid zone right here. Below there, yes, I will be looking for a nice little markdown phase down somewhere around about 42.5 before the next sort of medium term time frame bounce, then come back to it tomorrow. But for right now, short term time frames, if we are going to look at to the hourly right here, where is the current short term time frame pivot to the upside? 45,850, actually the same level I believe as yesterday, or right around there. And if Bitcoin does start to take out that level to the upside once again, meaning either a closure above 45,800 or a higher high above whatever this wick is right here, which is just under 46,000 bucks, then I would look for extension all the way up to this next horizontal right here, just under 47,000 bucks. That actually will have implications, however, with our momentum oscillators over here, as you will see. Let me actually just man, now I'm just destroying all my charts, but that's okay. Had them all set up nice and well done. Anyways, 4 hour Stokes will actually be maintaining to the upside as long as we are closing above 45,180. So that would be good for the short term, obviously. But what I'd be more interested in is the 12 hour right here, which will flip back up if we do close above 46,350, and that would very likely carry on those targets higher than 47,000 bucks. And at that point, I'd really be looking for Bitcoin to put in either confirmation of this bear trap, which would be had by a daily closure above 49,500, or a 12-hour closure above 50,000 bucks, or a 4-hour closure above 50,500. At that point, I would essentially be looking just for a continuation of the general rally to 60,000 and probably beyond. And you can talk about all the, crazy, amazing, and parabolic targets that I'm sure that many people are interested in. By the same token, if Bitcoin does take out that level, I would very likely be looking for, at the very least, a rally somewhere between the 382 and the 0.5 right here, which is between about 48.5 to 49.5 or so. And that is typically where we would be looking, or at least I would be looking for a lower high. So if I see any sort of weakness right around there, that's where I'm essentially looking to potentially put on shorts. And if we do see any sort of especially those timeframes that we spoke about earlier close above there, then I would be looking for, well, essentially Bitcoin to kind of just chug its way along, complete the bear trap, and all is well and good in the hood. Okay, so now we got that out of the way. Let's get into the fun stuff. Let's get into the long-term analysis stuff. Let me just set this one back up on over here. In fact, I'm curious what the daily is looking like right now as well. Yeah, actually, daily Stokes will turn back up with any sort of a closure above 48,850. It looks like as well. I might even go ahead and say that the daily pivot to the upside to confirm a bear trap would really be above about 49,000 bucks on closing basis, if that were to happen. Okay, cool. All right. So where do we want to start off right here? Where is my charts? Where are they? Let's start off with this one right here. Make it nice and simple. Here we go. Big shout out to StarCatify for awareing me of this lovely function on TradingView right on over here. This is gonna make my life a lot better, and probably better for you as well. All right, so here's what I've done is I've essentially marked off 4 iterations, or working on 4, I should say, iterations in the past of Bitcoin, where we have seen a very similar sort of occurrence that we're going to expand upon as time goes on. And also in lieu with what we did see and look at the Krown chain application earlier with all the quant data and quant statistics. But for right now, looking at this right here, if we were to make this as simple and as clear as possible, Bitcoin on this very similar date typically does like to go down and retest into what you can see right on over here is the yellow 21 exponential average. Now keep in mind, this happened right on over here, basically on our first to second week of September, essentially, which we'll just call, technically speaking, this one's going to be marked off on the weekly at a 6th of September. We do know that it was a 7th, obviously, where we did get that move down to test directly into the 21 exponential average. Well, we do have a few more other iterations similar to that, actually. In fact, now that I look at it right here, we have this obvious one right here, which did come in from September of 2020. So just last year, Bitcoin played at that nice little downside move after getting what I essentially considered its macro reversal, trading back above about 11,000 bucks, and then did dump down all the way into the 21. Obviously, that was just within the context of a macro uptrend, and well, that was a phenomenal buy. 22 to 23% down right there. And you know what? Now that I've done this, I'm gonna throw this one right in right here. Let's just get something like that. And let's just pop that in right there. And I actually will not mark it off with the vertical line right here because it will not fulfill the other criteria that I'll be looking at soon enough. But I do think that that's rather interesting right there. Anyways, just as a general side, we do typically see Bitcoin on the weekly correct down to the 21 exponential average during its bull markets, for what it's worth. And in this case right here, it also should be known on this correction, that was a 23% correction. I think this one was about the same. Yeah, about 22%, actually almost to the dot right there. Interesting, but that's actually not what I'm focusing on right now. You'll also notice this correction over here, this one happening in second week of September, comes down, nice spike down to the 21, and actually recovers a decent amount of that weekly dildo right there, and just marches its way onwards and upwards throughout the rest of the year essentially. And we have the same thing over here, and what do you know, the date is late September, of course. And where do we correct down to? Just kind of a nice wick to the downside out of nowhere. This one coming all the way down to the 21. And again, if we were to actually measure this one out, this one about 25%, actually rather interesting. In fact, I should measure the other one out as well, just for full disclosure right here. And let's see what we got right here. Oh, what do you know? Another 27% move. Somewhat similar, you might say. And then we have this one over here. This one admittedly is not in September, but I do think that is of somewhat interest, as we will go over soon enough. But again, you get another test down there, about a 21.5% move. That sounds rather familiar yet again as well. And Bitcoin just carries on with its overall macro rally there. So that is what I'd like to start this off with, of course. But as you'll notice here, I've marked off all of these ones with a vertical line. And what I'm going to do now is I'm going to start to, look for a few more similarities here. Let's start it off by putting on some Fibonacci retracements from the prior cycle into, the next one. And what do we see when we put on this one? Well, we can start it off way back on over here, this one coming in from 2010 to 2011 cycle. And you'll notice that the test down on that red arrow was right at where? The 1.618 Fibonacci retracement. Interesting. Okay, not too much on its own, but let's see what happens when we do the next one. Okay, so we do this cycle right here from 2011 to 2012. And where does this red arrow come in right here? Is that at the 1.618 once again? Actually, yes, it is. Rather interesting, you might say. Okay, let's put on another one. Put on another one right here for this cycle from about 2014 to 2015. Sorry, dog's getting crazy over there. And what do we see where this test comes down around? The 1.618 Fibonacci extension. Very, very interesting yet again. Dog's going crazy. Hopefully you guys can't hear that too much. And what do we have over here in 2017 resolved in the 2020 markup right here? Well, where are we at right now? If you get to 618 or the 1.618 extension, you'd be right. Rather interesting. Anyways, let's see. I have a few more of the things that I want to get onto here, and I need to make sure I keep my notes open because this one is going to require some more due diligence on this one. So I'm going to get rid of that for now, and let's pull this up right here. Okay, all right. So also looking at the weekly RSI, you will notice, or you'll very likely notice, in fact, you'll even notice way on over here as well, we get, and I'm going to mark this one off for this particular purpose. Let's see. Okay, we get all of these vertical lines coming in around the same levels on RSI, actually. This one over here, right around about 58, kind of where we're at right now, or a little bit lower right now, to be fair. We see this one over here in 2013, this one coming in right below 60. We see this one over here in 2017 coming in a little bit above 60, actually, but still within the same region, basically all between the mid the mid $50, not $50 region, but 50-point region to low 60-point region. And then we have this one that I just identified right here in late September as well. And then we have this one right in over here, this one at the lowest of it so far. But keep in mind, this will actually be reactive until the weekly closes later today at 8 p.m. Eastern time. So if we are going to see something resembling a bit of a bear trap, we do expect that Bitcoin does play out a bit of at the very least, a short-term upside move intraday to day. And we'd expect to see, somewhere right around here, which is very much possible by end of day. That is rather reactive, to be fair. So yet another thing that does kind of align with that whole analysis. Anyways, was there something on? Yes, there was, I believe. Hold on, let me just double check. Yes, okay, here we go. Also, going into the bottom pane over here, BBWP on the daily. Again, keep in mind all of these vertical lines represent the same, the same areas. And what do we have right here? Bitcoin expanding from a very low level. This one actually coming in from basically single digits. And well, is that similar to this one over here in October 2020? Indeed it is. This one coming in all the way down. Yeah, or sorry, this one in September. Obviously, I kind of got that one wrong with my marking, but we all know where it is. We looked at it earlier. And this one coming in all the way down to about single digit percentiles as well. Very interesting from a volatility perspective. So matching a bunch of different, variations together. Then we have this one over here in 2017. And what do you know? This one actually not necessarily in single digit percentile, but definitely in the teens, which is certainly considered low. I mean, anything below about 25 percentile, I consider like, okay, time to be paying attention right now from a volatility perspective. And then if we go to the prior iteration before that, which was... where is it? There it is in 2013, September yet again, coming in from pretty much the same area that we do see right now, single digit percentiles. And what do we have in the one prior to that in 2012? And that was coming in from yet again, single digit percentiles. And what do we have? Nope, we don't have anything other than that because that was the final one. Interesting. Okay. All right. Let me make sure that I'm on the right. What I should have done is I should have I should have actually like written everything out, but I actually just did this in a very bizarre fashion, which I should probably be a little bit more organized with my life, I do suppose. Anyways, that is what I have for there. So that is interesting enough on its own. We're already 16 minutes into this video, which is kind of crazy, but we got a few more things to go, of course. Okay, the next one that I'd like to point out is, of course, this. This is going to be this over here. So some more fundamental indicators, again, in combination with what we looked at over here, especially with the open interest, which we had a nice wash, and especially with the funny rates, and especially with the exchanges Bitcoin reserve. All of those things of particular importance. Now, let me go back on over here. And we'll also look at this from the, of course, stock to flow indicator perspective, of which, let me see, did I put on my, yes, I did. Let me actually get rid of all the fibs for right now because they're not relevant to what we're looking at here. There we go. Lovely. Massive love to you, Mr. Darkatify, because you just made my life a lot more organized. Here we go. So what I've done here is, of course, I have marked off about the same areas that we're looking at. In fact, no. I marked off some of these as actually halving dates, funnily enough, but we're going to get rid of those ones. That's going to be that one right there. Do I really want to be getting rid of those ones? Well, fuck it. Yeah, we can always do them over again. And what I want to focus on right now is I want to focus on the last three iterations that we did speak about. So again, if we go back to 2017 in September, this would be this one right here on that very nice wick down. And what's going on from a stock to flow indicator perspective? Well, what do we see right here? We see that it is, of course, entering into a corrective phase. And then more importantly, the color on this one is just freshly turning green before essentially just putting another weekly high or low and working its way all the way up to, total price of almost 20,000 bucks. Dog's licking my feet. Nice. It's quite distracting. Also very erotic. Anyways, I really like that. So we also have the other iteration way back on over here as well, right? We had this one where Bitcoin was in, I believe, September 2013, right around here. The stock flow indicator just freshly turns green as well. And what happens after that? Bitcoin's in that slight corrective phase, as we did speak about, and just works its way onwards and upwards for a massive gainer from about, $150 to $1,1200 at the end of the day. Not bad, you might say. In fact, you even see this one over here, by the way, as well. I don't know how much this one actually counts or is relevant, seeing as it's like so early in Bitcoin's history, but this is September date. We actually did have a bit of a correction right there. By the way, major wick to the downside right there. Did get bought back on up, to be fair, but Bitcoin was like extremely new at this point. So I don't know. Again, I don't know how much I'd put weight on this, but we do see a somewhat similar scenario with this. Of course, it starts to turn green. We get a correction right there, gets bought back on up, and of course, the rest is history. Anyways, what are we looking at right now? Well, of course, it started turning green in actually June, July. However, which we did start that correction, of course. But right now, as that does come down, where are we? We are still within the green zone, of course. And, well, that would look oddly similar to the last few times as well, as the cycle does lengthen, which I do suspect is going to play a part into that. Because you can see over here when it starts to turn green, Obviously, you know, it like starts it right at the correction. This one, pretty much the same thing as well. This one a little bit after, and this one a little bit further after as well. Kind of the same accord here is what I'm trying to, You okay over there? Oh my God. Actually a pretty funny scene in the background right now. Anyways, I'm going to turn this one off for the time being, and we're going to turn on the Bitcoin log curve zone as well, of which I do think that there is a somewhat interesting interrelationship between this one as well. You can see just from an intuitive standpoint that anytime this thing's in the green zone, essentially accumulation, anytime this is in the yellow zone, essentially that's kind of like your mid-cycle, if you will, and a lot of the time reaccumulation, as you see right here, as you see right here, and perhaps even right here as well. And then of course the red zone, you know, typically your tops, of which did get, you know, most of the tops pretty much well for now, I suppose. Anyways, what I'm trying to say is that it would be, one, uncharacteristic for Bitcoin not to put a parabolic blow off top into the red zone. We just have not seen that throughout the almost 11, 12-year history of Bitcoin now. And then more importantly, if we put on these once again, look at where these corrections happened around. They happened right around the bottom end of the yellow zone, right here, and what are we looking at right here? Coming in right down on the bottom side as well. In fact, where did Bitcoin spike down to? Spike down, well, yeah, get this right, there we go. Spike down literally to the bottom end of the yellow zone right there. So for a beautiful touch. Interesting. Okay, well, let's make all weird over here as well. Anyways, interesting yet again. So let's take this one step further and look at this from a super trend perspective as well. Something that, you know, I actually don't put too much weight on usually, but I think it deserves a little bit of love just because it has been, you know, so damn consistent. Let me see. We can look at the daily. We can look at multiple different time frames on this one, but the big ones are the daily and the 3-day. And where did Bitcoin correct to on that last move down? Corrected right down, a spike low on the bottom end of that super trend. Okay, well, is that relevant? I mean, we typically do see that on Bitcoin's corrections, yes, as we have seen several times in the past. But if we go look at the prior ones coming in from right on over here, where did we come down to? Same area. If we go to the one before that, let's see if we came down to the same area as well. I suspect that we did. This one, again, does wick below, to be fair, but does not close below. Does close right at it. I think we had one more over here as well. And yes, this was it right there. September coming right down to it. And very, very, you know, somewhat interesting as well. I think this maybe shows a little bit better on the 3-day as well here. Just, you know, as an aside, whenever this thing's been green, it's kind of been like a fucking, you know, one of those... like it's been one of those dummy indicators. Just it seems to work, for lack of a better, you know, explanation. Anytime that it's green, good. Anytime that it's red, bad. Anytime that it's gray, kind of trendless. Anyways, for what it's worth right now, you know, where do we spike down to? Again, the same area right there remains green. Do we have the other corrections on the board as well? Yes, of course. These ones over here. And this one over here from 2013, and this one over here from 2012 as well. Interesting, very, very interesting stuff. We are now 22 minutes into this video, and I think I might have a couple more things to get into. Yes, indeed. All right, now let's bring you over here to the secondary chart, of which I'm running a quarterly on this time frame, as far as the time frame goes. And for what it's worth right now, Bitcoin is going to have a chance to close above the topside Toronto band here on the next closure, which is in 18 days at the end of September, basically. So when September turns into October, we will get yet again another quarterly closure. And for what it's worth, anytime that we are trending above the topside Toronto band right here, you are in the midst of a macro bull market. Now, is there enough iterations to really make too much of that? I'd argue no. But it is interesting nonetheless. And more importantly, with this, if we do close above the topside Toronto band right here, my sort of rule set does say, you know, yes, this is a correction and you know, could go on for another month or two. Possible, yes, it doesn't really speak towards the timing of it, but I would be looking for a bullish resolution out of it. And more importantly, I would not be looking for Bitcoin to trade below wherever the wick low is for this current quarterly. In fact, to that point, we have something very interesting going on here as well. You'll notice, or perhaps you'll notice, oops, let me just take everything off, and I'm going to take everything off right here as well. We're going to naked on these charts yet again. Oh, and while we are here, we can just look at the 9 exponential moving average, which is the cyan moving average right here. You can see that anytime Bitcoin's above it, generally good. Anytime Bitcoin's below it, bad. And what do we see right here? Well, we've thus far actually, well, it looks like the algos and bots have kind of bought off on it. So what you'll notice here is that this is just a weird thing that just seems to work. I can't believe that it's this fucking simple too. Okay. ban technical analysis after this one. This one's just too fucking simple, but it's true. Okay, so I don't know why I'm laughing so much about this. The quarterly wicks. The quarterly wicks on Bitcoin. Basically, anytime Bitcoin has traded on a wick lower than the prior quarterly low, those have been your macro reversals every fucking time. That also implies on the other side, in your bull markets, your quarterly lows, your quarterly wick lows never come lower than the one prior, or in the one prior to that, which is obviously, you know, like a continuous statement. So let's go ahead and back test this one, except for this one right here, actually, except for this one right here. But again, this was so early on in Bitcoin's history, I don't think it really counts. But as far as you look at it right here, you can see that all of the wick lows, all of the lows basically of that quarter were never violated until you get the reversal. Right, and over here, and we could do the same thing, higher low or higher wick, 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 and then we got our first lower wick right here. It takes you all the way from 2014 to basically 2015 right here. And then what happens on the reversal? Higher wick, 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 higher wick. I'm saying that fucking 50 times fast. And then where do we get our first lower wick? Right here, April 2018. And for the next like half year to a year, Bitcoin corrects all the way down for a from that price point, a pretty nasty move, about 70% down from the high to the low. Then what happens over here? Higher wick. This actually literally calls the low to the quarter, I suppose. And then same thing over here, same thing over here, lower wick right here. That literally precipitates your coronavirus dump. Just so you know. Same thing over here, higher wick low, higher wick low, higher wick low, higher wick low. And by the way, these ones over here, they probably don't look like it, but they are. We can measure it out right now. 27,741 on January 2021. 28,754 and 40 cents on April 2021, and thus far the quarterly wick low for our current quarterly is 29,292.73. Very, very small, but yes, they are there. Rather interesting. Anyways, let me put back on this as well, and let's go put back on the bi-quarterly as well, or the bi-quarterly. That would be the 6 month. What I'm trying to say is the bi-monthly right here. And for what it's worth, right here, again, you know, same sort of analysis on this one. You can see that it loves to correct down to that cyan 9 exponential average, and basically, as long as that has a positive slope, those are your bull markets, taking it all the way back to 2012. Very consistent with it. And so far we do still have that, so fair enough. Anyways, is there anything else that I want to get into here, or are we actually nearing the end of this video? I always do these. I always fucking do these, and then I come back to it later. I'm like, fuck, I missed like 5 things. God damn it. Let me just double check. Okay, boom, boom, boom. Okay, we got that. We got that. Okay, and I do want to show 2 major bearish things that could just annihilate everything that we've looked at right here. And, well, and I'll just leave it like that. But for right now, let's see. I feel like I know that I'm missing something, man. I know that I'm missing something. Perhaps it's on the quarterly ADR right here. Let me just double check. Quarterly ADR still remains positive, albeit very, very close to the one read right there. Not necessarily the best thing, but it does remain positive, to be fair. Let's see. What about the monthly? Yeah, the monthly was the one, and maybe the bi-monthly as well. Yeah, the bi-monthly. Okay, so should we get into some bearish stuff right now? All right, so bearish stuff, it's a lot more simple, actually. It's a lot more simple, in fact. In fact, it's the most simple thing possible. And what is it? What is it? What is it? It's this right here, the line chart on the weekly. The weekly trend has been your friend since the dawn of time in Bitcoin's history right here. And by the way, it looks like we're going to get that to test to the downside first. That we spoke about at the beginning of this video right here first. All right, so nice. We might even get it on the video. Nice, not bad. Anyways, most importantly with this, basically anytime that Bitcoin has been in a weekly downtrend, that's been your weekly macro, essentially, macro bear markets. And whenever it's been an uptrend, that's been your macro bull markets. Actually, in fact, we might as well just look at it from this perspective. Simple enough. Anyways, what are we in the midst of doing right now? Well, we potentially could be seeing a trend reversal right in front of our very eyes, potentially even confirmed as soon as today. I mean, we do have a bearish engulfing doodle on the weekly 4 right now. Not fucking good, by the way. In fact, if you're aggressive, you will be looking at that as confirmed local high. And if that's confirmed local high, what do we have right here? Well, we have a low, we have a high, we have a lower low compared to this low, and we would have a lower high if that does get confirmed. Now, for conservative traders, well, in this case, what would you be looking for? You'd really want to see like a closure below about $44,000 on the weekly, and that very obviously fucking do it. Anyways, oh fuck, that's what I forgot. I did forget a couple more things. Jesus Christ, man, I did it again. All right, let's go over here to the fundamental chart. Okay, fundamental chart. Yes, let's look at this. And what I've looked at on over here is also, of course, the hash ribbons indicator, right? The hash ribbons indicator is something that has been pretty damn well tested over the dawn of time. Some people might call it a meme, but at the end of the day, I suspect that these people don't understand statistics and probably, well, I'll just leave it at that. I'll just leave it at that. Anyways, most importantly with this, what do we see? We do see that over 1, 2, 3, 4, 5, 6, 7, 8. Let me go to a weekly here. 9, 10, 11, 12, 13, 14, 15. Iterations, it has been extremely consistent, all except for one iteration. That would be this iteration right here. And what is the essential assumption that we have seen with this? Anytime that we've gotten the blue buy signal on this one, it has marked that the daily higher low prior to that was the macro low before never coming back down there and closing below there again on a higher time frame, like a daily or even in a week. I think it's just easy to look at it in a weekly right here as well. See this one right here. Where's your last weekly low? Right there, 3,100. Obviously, Bitcoin never goes below it. This one is, again, your coronavirus dump time. So yes, you know, weird things do happen. Black swans are non-zero probability. And, well, if one were to happen right here, this would be a damn good place for it to happen, to be fair. This one over here, obviously your last prior low, never violated again. Same thing over here. Same thing over here thus far. Same thing over here. Same thing over here. Same thing over here. Same thing over here, same thing over here, and same thing over here, and probably a few more that I've also missed as well. But most importantly with this, that would imply that we would not, if this is going to hold true, that our last major low at $38,000 would not be violated, would not be fucking violated on a daily closing basis, if that is going to hold true. And a lot of the time we have seen, and I've actually gone back and studied all of these ones, that on average, Bitcoin tests within 7% of those lows. And thus far, even on that spike low that we saw the other day, it's been about 10%. Yeah, it's about 10.5%, which is, you know, a little bit above the average. Not, I wouldn't say it's an outlier, certainly. We've seen some as much as 20% for what it's worth. But let's just play around with numbers right here. And what would like 7% look like if we were to just see something like that? Well, somewhere down in like the low $40,000 territory, just for what it's worth right now. Also, should we go over this? Well, we could maybe go over that, or we could maybe go over this. I don't think it's that pertinent right now. All right, so let's go back over the bearish case. So I think I did get everything now for the Bullish case right there. There's two major things for the bearish case. The first one, obviously the weekly trend. We might very well see that actually reverse in front of our very faces, potentially even today. I mean, if Bitcoin closed below $44,000, even the most conservative people there, you know, you don't have anything after that. I don't think that you have anything after that. I think that Bitcoin's going to work its way back down probably to like the mid to low $30,000 territory. By the same token, we also do have this one, a big one over here, and that is the ADR, advanced decline ratio, essentially, an indicator that I use a lot in traditional markets, but I don't use it as much in Bitcoin land. But don't mistake that for like not importance. This is phenomenal. Anyways, well, I'll just show you the results. Hey, whenever it gets to this level right here, toppy, maybe toppy as well. It hasn't really been tested enough on this time frame specifically, but those would be the two major things. Plus, of course, which I can go over here. Where was it? Was it this? Yeah, it was this. Plus, the monthly accumulation distribution indicator did turn negative coming into September as well. So with that said, I do want to address one last thing here. One last thing before we go. One last thing to rule them all, and it would be this. Let me just get rid of all of this. So people have, not people, but like there has been some sort of a like general like meme going around the market, basically that September is always a dump month. And for what it's worth, and perhaps you might agree with this, perhaps you might not agree with this, but I'd suggest that you, instead of just listening to someone say something and then blindly following it, do the studies yourself, because thus far, Bitcoin is a bit of a doji dildo right now, with like a little bit less than 3 weeks left to go in the month. So if it does close something like this, Bitcoin is essentially unchanged. I would not call that a dump month. If we go back to the last September prior to that, this one actually did dump off a little bit, corrected down all the way to the non-exponential moving average, as you can see right there. And by closure, did lose about 10%. I would consider that, yes, that was a dump within the context of a macro uptrend, but you know, it was a dump. This one over here, same thing. So the last two ones did work out, to be fair, but this is the problem. I think that people have a great bias with like what's happened in the last couple of years rather than looking at the history of these things. When we get over here, this one a little bit more of a doji dildo, but even if you did want to, put it more in the bearish way, I mean, this one probably not down too much to be fair, but it was over a continuation. So I would consider this one bearish as well. So the first three definitely bearish, yes. Okay, what about this one? Wait, where is it for one? This one over here closes as a doji, pretty much unchanged. What about this one? Wait, where is it? What about this one over here? Closes green, so that's not true. It literally went up. This one over here closed green yet again. So now it's literally 50-50 right now. It's 3 versus 3 at this point. This one over here did close red. Yes, this one pretty damn nasty actually, in fact. So 3 versus 4. Where do we have this one over here? This one, again, another doji, technically even closed green. So 4 versus 4, about 50%. Then we have this one over here, closed actually decently green to the upside, so 5 versus 4 now. And if we go a little bit further back, we got this one over here. This one actually pretty damn good one. This is probably like the worst down month actually. That would be 5 versus 5, I believe now. And what do we have over here? This one closes the doji, technically traded significantly to the upside, closed basically unchanged. I would put that in the not dump category. In fact, that one actually pumped pretty fucking significantly, if anything. Just closed unchanged after that. So what does that essentially looks like? I think it was 7 versus 6 now. So technically speaking, not only is September like you need to define dump first is like the problem with this sort of bullshit, because I think people just look at like any downside move is like a dump. If it goes against your position, it's a dump or manipulation or a pump manipulation, right? At the end of the day, this, for what it's worth right now, is pretty much unchanged. So this might even turn out to be 8 versus 6. Is that so? Would I feel comfortable blindly saying that September is always a dump month? Absolutely fucking not. Is like less than 50% a good like probability? No, at least in my book. I mean, again, make the decision for yourself, obviously, but blind stuff like that, I just have a very difficult time trusting. And again, just understand like how these sort of memes can get perpetuated without any real evidence. And if you actually go and look at this yourself, I suspect that you'll probably come to the same conclusions, or maybe do, maybe you don't, as myself, and you'll probably look at this as like, okay, doesn't really seem like, I mean, it's literally less than like 50%. I'm not so sure if I'd agree with that. Anyways, we're 37 minutes into this video. It's been way too long already. I do apologize about that, but I hope I got everything out on this one. I'm just double checking my good old stuff over here yet again. I did forget one thing. Haha, it was this right over here, wasn't it? Wasn't it? I know, where's my PMAR? Where's my PMAR? Where is it? Where are you? There it is. Yeah, I also drew a... You do this on a 5-day or weekly, same shit basically. But basically, anytime that we do see the PMARP come down to this green zone right here, typically, those are market lows. Now, not always. No single indicator is perfect. Fucking no shit. But typically does, has correlated with the macro low more often than not. Calling this one right here, calling this one right here in 2014, calling this one right here in 2019, and this one in 2020, and perhaps one over here as well, if that actually does work out. Anyways, I'm going to end the video here. This is much too long. I do apologize about that, but I wanted to get all these thoughts out on video. Hope this one serves you well. Make the decision for yourself. And with that said, take care and hopefully see you soon.